Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is February 15th, 2022. I'm coming at you live for the Tuesday live stream. Welcome one and all. Thank you for joining. All right, if you're listening to this after the fact, thank you for listening. All right, today we're going to talk about a short-term, detailed analysis of what is likely going on with Bitcoin. All right, we've been consolidating for 3 or so days, and lots of people have a lot of confusion as to what's going on. Right, a lot of people think. Not everybody, but a lot of people think, okay, this is it. You know, we broke out to the upside on this 3-day long consolidation. That must mean get your moon boots on, and we're going for that all-time high once again, okay? And other people think, well, not sure I'm getting in because they call this a dead cat bounce or whatever. I don't know. People are confused, right? There's a lot of confusion here, indecision, right? A lot of buyers and a lot of sellers kind of holding one another, playing one another equally, right? So it's tough to say. So I think this short-term detailed analysis would be useful. Not saying it's going to be 100% correct, but we're going to try our best to see if we can't see anything going on in the charts. Okay, first things first, hello to everyone. Hello Steve, hello 410 boxing fanatic, hello everyone else that hasn't written anything in the chat. I'm not exactly sure who all is in here, but welcome. And secondly, before we go into the short-term analysis, let's zoom out really quickly just to get our bearings. Let's go on the daily, okay? We're just going to do a quick kind of... I think, in doing any kind of analysis, and let's erase this. I like clean charts. Doing any kind of analysis, I think the first thing you should do is kind of get your bearings. Like, figure out where you are, because that matters, right? It matters to know more or less what's going on from a larger... long-term standpoint, okay? And obviously, unless you've been living under a rock, but I don't know where everybody's coming from, if you all are trading or looking at the price every day, or you just got in yesterday. So I'm gonna say this: we've been in a hellacious downtrend for the past 3 months. So we spent 86 days approximately going down, okay? And that had a harsh effect on everything else in the cryptocurrency space. Recently, past couple weeks, we started going up, right? And breaking out of this downtrend, quite literally, right? This line indicates the trend, the resistance of the trend. Notice I'm on log scale, very important, because I'm looking at something that spans from 69,000, nice, to down to 33,000, right at the bottom of this trend. So got to be on log scale or else it's inaccurate. Just to show you, sometimes it doesn't matter if you're not on log scale, but if I get off log scale, this is what our trend line looks like. Go back on log scale, it looks like this. So it's significant. Anyway, that's a side note. So we broke out of that trend. That's the first thing, right? Breakout. And breakout means we broke the resistance, okay? First things first. Breaking resistance, you tend, probably 99% of the time, once you break resistance, I honestly don't recall any time that significant resistance was broken and not retested. Gotta retest, okay? That's just what happens in charting. Like, you break and you retest. You break and you retest. So I'm still waiting for the retest, right? So that's one reason I think we're going down. We gotta retest this resistance, right? At some point in time. The second reason is we break trends with corrective waves. You don't break trends with impulsive waves. Those of you who are under the impression that it's just going to go like this, when have you seen that? It doesn't work that way. Quite literally, by definition, and this is an Elliott wave kind of focused channel. That's like my strong suit. That's my expertise. That's what I focus on, right? If, let's say, you can count 5 waves down here. This is an impulse down. I mean, it looks like an impulse, right? I'm not going to count it. It doesn't really matter what the count is. But just assuming it's an impulsive wave down, and that comes in 5. After 5, you get 3. That is one of those things, and this is the beauty of Elliott wave analysis. There's just a few guidelines and principles that don't change, right? So you can look at a chart, and if you can identify one thing, you kind of can anticipate with a high degree of probability, a high degree of certainty that the next thing is going to happen. If I can count 5 waves down here, okay, and that I'm assuming or I'm accepting that as an impulse to the downside, then I know for a fact I'm looking for 3 waves in the opposite direction. Every correction happens in 3. That's another principle. That's another thing that you can write down. It doesn't matter if it's a ABC, a WXY, or WXYXZ. It's either a double 3 or a triple 3 in complex correction, or an ABC correction in the in the form of a triangle. It could be in the form of like this, a flat correction. It doesn't matter. A zigzag correction. It doesn't matter. After 5, you get 3. So this is why I count 3 waves here. Okay, and that by definition is an A wave. Some of you may ask, what's an A wave? I say this all the time on the channel. An A wave, by definition, is a break of structure. Break of structure equals A wave. Okay, it's very simple, right? Keep things simple. It's easier said than done, right? You can have all of these sort of principles, and you can say, oh yeah, that's very basic. And actually the things that work the best, and if you look at nature, if you observe carefully, there are a lot of elegant systems that are fundamentally very basic and simple. The thing is, their application may be a little bit more complex, okay? Application. So your execution, your application of these principles may take some practice, right? That may be a little easier said than done, but the fundamental thesis, the theory is quite simple. After 5, you get 3. This is 3 waves. That's what I'm counting here, okay? And this is why I've identified this. That's why I was looking for it, to be honest with you. I was looking for it first before identifying it. And those of you who are subscribed to the channel know, while we were forming it, I was looking for it. I didn't get it perfectly as it was forming, but I was pretty close, okay? I got 5 waves up here. I'm not even gonna bother counting that, but basically 5 waves up here, and then a 3-wave structure, right? After 5, you get 3. That's A of B, B of B, and then 5 waves. For those of you who think, oh, this must continue, well, I challenge you, count 5 waves, because I'm sorry, that looks terrible and it just looks like a bunch of graffiti. But anyway, after you count 5 waves, you get 3 waves. I challenge you, try and count 5 waves here, and I don't think that's that difficult, right? I think that's pretty much done. Now you can say, Dean, I get it, I count 5 waves, but what degree? That's the challenge, right? That's where execution gets a little hairy. Sometimes you can count 5 waves, but that doesn't necessarily mean you're counting the right 5 waves, right? So that's kind of like an argument against saying it's done. But I mean, I'm just looking at it. I don't like to overcomplicate things, right? Usually, in my experience, the simplest analysis is usually the most correct. Once I start to try and find and I'll show you an example of this. Hopefully I don't forget that point, and I'll show you an example of how usually the simplest analysis is the correct one. Okay, so anyway, let's just hold that thought. I count 1, 2, 3. This 4th wave really pissed me off because I missed it because it was so shallow. Didn't even hit the 236. It kissed the two. Well, it hardly touched the 236, but anyway, taught me a good lesson. I missed the entry for the long of the fifth wave, but anyway, that lesson, I probably missed a few $100s, but probably gained, in potential income, thousands or millions, because that lesson was learned, and those lessons are priceless, right? That's the mentality you need to have to be successful in this game. Even if you mess up, you get a lesson, a missed opportunity or a loss, you have to make it count. You have to turn it into a lesson. Everything has to be transmuted to the positive, or else it'll eat you up alive and you'll quit. And the second you quit, you lose. So this is something I've learned in trading. You have to be an eternal optimist, and you have to be you have to be realistic, but you have to be hyper optimistic and hyper positive. If you're a pessimist, you're not going to make it. You just aren't going to make it. It's too difficult, and you're going to get discouraged. Anyway, I see 5 waves up here, okay? So for me, this is finished. This is all done. And another reason to people who say, well, it can't be done, anything's possible. Obviously, can't rule anything out. But I see this break of structure, right? I see this as a counter to the break of structure, and I see this to the counter of the counter, okay? So this, to me, is an A wave. It's printed. It's done, right? The A wave comes to wave 4 of the lesser degree. So this is the initial A of A, comes and hits wave 4 of the lesser degree of the previous trend, right? This is the B wave of that A wave. This is the C wave. This is the full A wave, and it comes to wave 4 of the previous degree. That's done. For me, obviously I'm not going to argue with anybody. Everybody's free to interpret everything as they see fit. But for me, there's no more talk about this continuing. That's not on the table for me. That's why, I don't see this as being even a viable continuation. This is clear break of structure. This is a clear A wave. I have very little doubt in my mind. Obviously, you always, anything's possible, right? But at the same time, I think I'm most successful when I have strong opinions, but then when I'm proven wrong, I'm not shocked. I used to be shocked that I was wrong. You have to, if people think good traders are arrogant. No, it's not arrogance. It's, you're so confident in your work. You're so confident in your system. You're so confident in your reads that you that's how you trade, right? I can't imagine. I know some people do this, and maybe they do it successfully. I just can't think like that. I don't want to think like that. They'll have 2 positions open all at once. Hey, 83 Madden. They have 2 positions open. They have a long and a short position open simultaneously, right? And that makes sense. You're hedging, right? But how? I just don't get it. If I know or I believe that the price is going to do one thing, why the hell would I want to hedge the other way, right? Obviously, reason states that there's always a possibility that it can hedge the other way, but I can't imagine living in a space where I'm so confused and so unsure. If I'm that confused, I'm not trading. I'm not trading. One thing I've learned is, if price is so confusing to you, don't trade. Wait for more candles to form an opinion. At least for me, I do not trade if I have zero clue. If I happen to be in a trade and I have zero clue, that's something else. Then I'll play more defense, meaning I'll manage the trade in such a way that I'll try to stay in the game if I think there's a viable option and I can still win the trade. Otherwise, I'm not touching it. I will not touch a trade that I'm totally confused at. And sometimes I see some analysis on YouTube and otherwise in some newsletters where they're not saying anything because they have no clue, and you can tell they have no clue. They're basically telling you, we have no clue. And it's just well, then why don't you just say you have no clue? What are you talking about? Anyway, I'm going off on tangents, but I guess that's the point of the live stream, right? Hope this is entertaining. Don't forget to like the stream if you haven't. And subscribe if you're not subscribed. Anyway, so for me, this is finished, right? 5 waves. And this is the initial break of structure, okay? This is the A wave, to me. Full A wave. If this is an A wave, then I expect anything after this to be a B wave, right? Boom. That's it. Simple. It's simple. It's easier said than done, though. Because the B wave can look like many things. It can be a zigzag, or the B wave of a zigzag structure. It could be the B wave of a flat structure, right? And then does that B wave extend to the between the 0.5 and the 618 of A, or does it go all the way to the 1618 of A? Like, what kind of B wave are we talking about, right? So again, the theory, simple, execution, little more complex, okay? So let's assume, and let's label this properly, that this is indeed our A wave. And we're going to change the, well, no, yeah, let's change the color. So A wave, again, every corrective structure comes in 3, right? A waves, B waves, C waves, or sorry, A waves and B waves, C waves are impulsive. Okay. No. Why can't I find a good color? Okay, whatever. That's fine. So let's just say that's the A wave. So I'm expecting, that's why all this stuff for me is a B wave. And I didn't read that until we got this. For me, this was the A wave complete, and this was the B wave complete, and this was already our C wave impulse. And so I was looking at this as a 2 wave. But more candles, more evidence, or more data, better conclusions. For me, this is what I'm seeing. This is the A wave. And now we form the B wave. All that 3 days consolidation, that's just A of B and B of B, okay? A of B and B of B, before even jumping into it, I could have told you it was going to be a nightmare in terms of like consolidation and volatility. Well, there wasn't much volatility, but it's just like, it's a nightmare to trade if you were to try to trade it, okay? But now that we have this breakout, I think there's clarity. And I think it's clear that this 3-wave structure, and we will now go into a smaller time frame just to see more detail. I think it's clear that this 3-wave structure is our B wave. So it goes A of B, B of B. Do you see that? And then A B impulse. Okay, and that is, remember, I've said this before, I've said this so many times. Any time frame. If you look at any time frame, you look for a reversal, you're going to see this. It goes something like this. Whoops. An A wave, a B wave. Sometimes the B wave can look like this. Sometimes the B wave can look like this. Which is a B wave, right? It's 3 waves to the downside. B wave, and then a C section, I call it, a little pivot, a flat correction into an impulse, right? That's what it looks like. That's the reversal structure. So now let me draw your attention to exactly what we saw here. Look at charts. I challenge you, don't take anybody's word for it. Don't take my word for it. Because one thing is, you can watch as many YouTube videos, even read about books about the best traders and so on and so forth. You can't learn to trade until you actually see it and it becomes your lived experience. You are in a trade and you're looking at a chart and it jumps out at you because you've seen it over and over and over again. There is no doubt in your mind that that is what it is. So it's helpful to see, you know, somebody point it out, but you have to prove it to yourself, or else you're not going to use it. You know what I mean? It's very important to do that. Don't skip. You can't skip steps. There's no such thing. So here, to me, that's a B wave right there. Yeah, does that make sense? 1, 2, 3. Okay, and then the C wave, the C section as I call it, A, B, and then the impulse. Here's your impulse. Now let's count the impulse. I hope this makes sense to everyone, like how I'm going about this. And we can go into a little more detail even and count 5 waves there if you want. But I see that as an ending diagonal. And I can see it as an ending diagonal in both Ethereum, maybe not Litecoin, but Ethereum and... yeah, I guess it's an ending diagonal in Ethereum and Bitcoin, but I think Litecoin is just straight up. Anyway, so now let's say this is true. This looks impulsive to me, right? If you're new to Elliott wave and you no doubt have seen the 5-wave schematic, that just looks textbook, right? So question is, do you have 5 waves there, right? And now let's not make things too complicated before we pull out our Fibonacci extension tool and try to measure it. Just look at it. It looks pretty straightforward. It looks like a well-formed impulse to me, with a 1, 2, 3, 4, 5, right? You can argue it, but now let's try to substantiate it with the trend-based Fibonacci extension tool. Let's take the distance of 1, pullback of 2. We see that wave 3 ends at between the 1236 and the 1618. That's legal, right? Minimum extension for wave 3 is 1, right? But usually it ends between the 1618 and the 2. We know that. So it is possible that this is wave 3, but again, let's keep things simple. First, what's your first hunch tell you? What's your first upon looking at it, not thinking of it too hard, like this just looks like one, this looks like another correction, right? This looks relatively simple. This looks like the complex correction. Boom, you're done, right? Like, you can overcomplicate things. I know a lot of analysts that, whenever they can, they'll throw in a complex WXY correction. There's no need to. Just keep things simple. Like, the shit is complicated enough. Trust me. Like, just keep things, the more simple you keep it, in my experience, the easier time you have, because typically the simpler reads, the simpler explanations typically are what play out. Okay, so I'm seeing 1, 2, 3, 4, and then a 5. So let's see. It looks like, so we had a relatively short wave 3, right? Relatively short, because typically it goes between the 1618 and the 2. We ended up at the 1, 2, 3, 6, let's say. So that 5 can be extended, and probably should be extended. So taking the inverse 1618 of the wave 4, we can see that wave 5 ended up at the 2618. Do you see? Right there. So do you see how, just keep it simple and then take it step by step. This is what I'm reading. Am I saying it's definitely right and, there's no chance that read is off? No. But is that what I would trade if I had to trade, gun to my head? Hell yeah, right? I'm going to keep it simple. I'm not going to jump out and say, this is a rare, I don't know, a running flat, for instance, is exceedingly rare. But people call for running flats all the time, not knowing how rare running flats are. You don't see them often. That wave 4 that we saw on the way up was a running flat, exceedingly rare. Caught me off guard, right? This is your running flat. Barely hit the 236. The correction that's supposed to happen in this direction, the shit corrected upwards with the trend. Exceedingly rare, right? And, if you know your fundamentals, you'll know it's exceedingly rare. But, people call for running flats all the time. So just, another thing is, there's no substitute for getting your fundamentals, like really, really making it second nature, right? That doesn't necessarily mean you're going to be a great trader, because trading and charting are two things entirely, right? For me, as a professional trader, most of what I do is risk management. Like, I read and chart, and I'll be right on price and be down on a trade, but I don't really care as long as I'm still in a trade, because as long as I'm overall correct in my analysis, I can manage a trade to completion, to a victory. It's all risk management, like splitting my buys up, laddering in, always having money to add to my margin, averaging, it's just all risk management, right? Knowing where to put my stops, moving my stops if I need to move them, knowing when to cut my trades, because I'm gonna be cooked if if I stay in. It's all risk management. Charting and knowing where the price is going, that's the easy part, and that's not even that important. Obviously, if you think it's going up when it's gonna giga nuke down, you're screwed, right? You need a modicum of some understanding as to what the price is doing, right? But a lot of people think that, as long as you know exactly where it's going, you'll be fine. You can make a lot of money. I don't think so. You got to risk manage your way to doing it professionally and to doing it consistently, right? Just my 2 cents. Anyway, where was I? Okay, I see 5 waves. Yeah, okay. I see 5 waves, and now that I count 5 waves and I see my wave count is legal, wave 3 isn't the shortest, it's actually the longest. Wave 5 was a little extended because wave 3 was relatively shorter than usual, right? That to me is a nice count, and it's not out of the ordinary. It's not, I didn't, pull any strings and invoke some special rules or whatever. It's just, I kept it simple. I love simple. Now I look at what I got after. What did I get after? A break of trend. Okay? So remember, your initial break of trend hits wave 4 of the lesser degree, meaning this is the trend, this is the lesser degree, right? This is the last wave of this trend, and where I circled here is wave 4. And now I'm going to erase all this because you can't see shit, but this is where our initial break of structure came, right? This candle broke to wave 4 of the lesser degree. That tells me that wave 4 that wave A has started, that this trend is broken. At least that's the first clue. And then from that, I get a B right here. So counter. And this, to me, is the final, well, it's not the final one, but it's another clue that the trend is broken. Now, can this be a wave 4 correction because volume's going down as we're going down? Sure. And we have one more leg up? Sure. Like I said, I'm not 100% sure that this is the count. Maybe I'm off a wave. Maybe I'm in wave 4. It's happened before. But it's close, okay? And another reason I think that this is it. Zoom out really quickly. If I take my Fibonacci retracement tool from the top of this to the bottom, I see that I'm respecting the 618. Okay? And that, when do you respect the 618? If this is a B wave, I said this was a B wave most likely, right? When you respect the 618, you respect the 618 in a B wave when you're in a zigzag correction. And what's a zigzag correction? A zigzag is a 5, 3, 5 structure. Okay? And so assuming that this is 5 waves and this is 3 waves, then we have to respect the 618. If this is instead 3 waves, then we have to come to at least the 786, because a flat correction has to at least come to the 786 Fibonacci retracement. The B wave has to come to at least the 786, and we all know it can go all the way up to the 1618, right? That's how you apply your fundamentals to actual price action to give yourself an edge, right? So here, just in terms of application, I can set my stops if I'm convinced without a shadow of a doubt that this is a zigzag correction, then I would set my stops at the 786. But that's not a good idea because, it's easy for you to be wrong and for this to be a simple flat correction, not a zigzag. And then you could have just set your stops at 886 and stayed in the trade. Because typically those flat correction B waves tend to go to the 886. That's the only reason I have it on this Fibonacci retracement level. So yeah, that's what I think is happening. Again, I think there's 5 waves. I think we're done. However, we can always go up a little more to the 786 or 886. We could also go all the way to the 1618 or 1236. I think that's less likely just because of this resistance right here. But I do think that this is a B wave, and eventually it's going to lead to a massive drop, okay? And so that's what I'm seeing when you zoom in terms of where we go, because that's a big question, right? Before all of this, before this move happened, like I said, I was under the impression that this was a wave 2, right? And this was wave 1. Okay, I still think this is 5 waves. Why? There's a couple reasons, right? First reason, if this is indeed an A, initial break of structure, and this is a B, C is impulsive, I know that, so I'm getting 5 waves. This is an ugly, messy, sloppy wave, 5 waves, right? It's hard to read. It's tough to read. That's why most people are thrown off by it, I think. But if it's a C wave, if this is an A wave and this is a B wave, then this is a C wave and it's 5 waves. It's simple as that. And if this is 5 waves, then this is 3 waves, and it has to stop at the 618. Do you see how that works? There are certain principles that are followed, and that's just how it works, right? And those don't change. If it seems violated, it's not that it's been violated, it's that you're looking at it wrong, or your analysis is a bit off. And that's tough because sometimes you're so sure of your analysis that you think the rules must have changed. And I think as a chartist, I went through periods where I was changing rules to fit my analysis versus, saying I'm wrong and, rethinking my analysis. But that's what I'm seeing, right? So I think it's very likely we reject from here, right, at the 618 and start our way down for 5 waves. If we don't, then it's back to the drawing board, and this cannot be a C wave. Do you see how that works? It's not, the whole idea of C waves being impulsive is wrong then. No, it's I'm wrong. And the 100-year-old theory that has been tried and true and pretty much consistent across all markets for 100 or so years, that's pretty much still intact. So yeah, that's what I'm seeing. And in terms of support, where we're going, I think it's gonna be and I've said this before, these B waves in these reversals, let's zoom out on them 4 hourly, they're heinous. I've tried to trade them before. I've never actually, to be honest, caught one of these. I've always wanted to catch one of these because it's such quick money, okay? This A wave, this B wave usually does something like this. It typically does something like this, okay? Not always, but typically does something like this and forms a lower low, right? Meaning on the A wave. It doesn't always, but it does tend to form a lower low. Now, you will say, we have this 3-month support. We must, at some point, stop here. I think we're going to briefly stop there and maybe put in a small retracement. But I think that we're coming down. I don't think that we're going to be stopped by much. Because given what we've seen here, there's a lot of money going long. There's a lot of people thinking that price is going to reverse. There's a lot of people, maybe they're chart literate, maybe they're chart illiterate, it doesn't matter. There's a lot of people with a lot of buy orders here, long orders here. Once the price moves down enough on them, after a certain point, right? Especially a lot of people are talking about this area. Once the price breaks this area, all those longs turn shorts. All those longs turn short, and they get squeezed. They get squeezed short. So maybe that's why it moves so quickly. But just looking at charts and looking at these reversals on larger time frames, they always have that B wave. Always happens really quickly. I've always wanted to catch it. I never have been able to. I would love to catch it. I'd love to catch one of those. So yeah, let's. I'm hoping that it plays out, but who knows? We'll see. Oh yeah, and in terms of where we will probably stop, like I said this morning, my money is on the 31 to 30K region because, and let's erase all this. Once you get to this point right here, once we get here between 38 and 40K, there's pretty much nothing. After we breach, if we breach 38 to 40K, there's pretty much nothing until 30 to 31K. So I think it's very likely that we breach 38 to 40K. And just as I said this morning, let's say this B wave retraces minimally. The minimal retracement of a B wave, we all know, is 0.5. It's 0.5 Fibonacci retracement of the A wave. And that 0.5 is right here, okay, at 38,675, okay? So if we were to do something like this and hold if we were to hold the 0.5, then I guess technically we can move up again. But why is it unlikely? And it doesn't really make sense. In order to have a 0.5 to 618 retracement of the B wave, you need a zigzag. You need 5 waves. Already here, this is not a 5-wave, structure. This is not an impulsive structure. This is a flat correction, right? So it's got to be a flat correction, right? You're putting in an A, a B, that makes this a C. This makes this part 5 waves, right? So this whole thing has to be a flat correction. That's why I think the minimum retracement actually can't be 38,675. It has to be 35,259. It has to be the 786 level. That's why I'm planning to come to at least here. And if we do make it to the 786 level, like I said, there's pretty much nothing in our way up until 30 to 31. And, probably the 1, 2, 3, 6 of the A wave is a nice take profit because it's a nice fib level. But 31 to 30K, I think is a good TP. So that's what I'm seeing with Bitcoin. That's my detailed analysis. Hope this was helpful. Hope this was useful. Let me know if you got value. If you haven't smashed the like button, please do so. And now I guess we can look at some questions in the chat. Okay, so yeah, 83 man. I actually think the top is 52K. Because if you zoom out, you see that 52K is the 618 of this drop. And if you are not on log scale, it may seem like it's 55K, but I think that is a mistake because looking at such a large range off of the log scale yields inaccurate results in my estimation. So look, I take my Fibonacci retracement tool from the top of that move to the bottom, and I see that the 618 falls at 52. So I'm fully anticipating this to play out something like this, something like that. Sorry. I anticipate, getting 5 waves up to 52K. I anticipate that. Oh yeah, and let's see. Get off the log. So let me erase all this and get off the log, and you'll see 55. Do you see that? The 618 says 55 off the log. That's a big difference. Because if you're off log and you're like, oh, I'm going to take profit at 55, but then the actual target is 52, you might get, you might get caught in the resumption of the trend if indeed this is a 2-wave. So you want to be careful. I think using the log scale when you're looking at such large ranges is very important. If you're zoomed in, you're looking at just, the hourly time frame, whatever, 15-minute time frame, I don't think it matters if you're not looking at such large ranges. 83 Madden says, long or short? I'm short immediate, in the immediate short term, I'm short. We're still in a correction, we're headed down. Yeah, I think so. What's your count from 33K? From 33K. From 33K. Oh, you mean my count of this structure, this A wave? It's maybe I said it, but my count of this A wave is simply, this is to me 1, 2, 3, 4, ending diagonal 5, and then A, B, C, flat correction, 3 waves, and then 1, 2, 3, 4, 5. 5. That's my 5, 3, 5 zigzag correction. That's my count for this A wave. How do you count 5 waves on that C wave? Oh, okay. Good question, Cloud9 Hostel. That is a good question. That is a great question, actually. Where's this? Here. So, I think this C wave is what we call an ending diagonal. And this is like, I don't think I was able to do this as an amateur. I knew about ending diagonals, but I couldn't tell you off the top of my head what the count was for an ending diagonal. Like, that it's a 5-3-5-3-5, or that it's a 3-3-3-3-3, right? I couldn't tell you that off the top of my head, and nor could I even like recognize one and then count it. Do you see what I mean? So yeah, this is another reason why, having your fundamentals so ingrained that you don't have to think too much is very important, because like for instance, in this case, you see this monstrosity of an impulse and you're like, what the hell is this? And to me, I see this move. This is my tell. That is a very odd looking sort of move, and that tells me that there's an ending diagonal. Also, the fact that this 2 wave and this 4 wave kind of encroach on one another. So here's my count. I'm seeing this as the 1, 2, 3 of the 1 wave. I'm seeing this 1, 2, 3 as the 2 wave. I'm seeing this 1, 2, 3 as the 3 wave. I'm seeing this one, where is it? 1, 2, 3 of the 4 wave, and then 1, 2, 3 of wave 5, right there. So it's more like this, and then the bottom is more like this. Okay, that's my count for this ending diagonal, and I think you can corroborate it with ETH, and maybe not Litecoin, but with ETH you can also see something similar. Yeah, any other questions? Is there anything else you guys want me to look at? So we've been hanging out in this area for quite some time. Anytime we're kind of hanging out, I'm thinking complex correction, okay? We're hanging out, that means complex correction to me, because if it's impulsive price action, it just goes, you know? So, you know, going down on the 5-minute chart, if this indeed is a initial break of structure, A wave right here, I think this is a B wave coming up here, okay? Especially since the volume is going down as the price is going down, right? That shows me that there's some confluence. It's convergent with the volume. So that just basically tells me that this is consolidation for a move, and that move is most likely up because it's counter. If this is an A wave, right, then this, whatever comes after, is going to be B and counter. If this is down, that's going to be up. Okay, so I'm going to see this B wave come up here, and then obviously a small pivot, and finally for the nuke. If we are already in kind of correction, okay, that's one possibility. Another possibility is that A already happened, and that's B, right? And this is C of this whole thing, right? Of this whole trend. And this is a 2 wave of this, waiting for wave 3. Those are my 2 possibilities, okay? And it's fine not to know, you know, you don't have to know everything. But, you know, just when I'm looking at it and I'm waiting and I'm like, you know, what's going on? If nothing's happening, always think complex correction. It's in some sort of complex correction. And if I have to choose between one, what I would do is I would look at Litecoin and I'd look at Ethereum and then make a decision. So I'm looking at Ethereum first. And again, keep it simple. Don't overthink shit. Like, you know what I mean? I think that is always helpful. I try not to kind of look too hard. Okay, I already know from Ethereum what I want to say. That's an A wave. That's your A wave. This is your wave 4 of your lesser degree, right? This is a B wave. Okay, that's where I'm at with that. Litecoin. Litecoin. Okay, see? Yeah, same thing. A wave, right? This A wave went a little deeper than those other ones, and this all is a B wave. Okay, where it will go is it's going to be a zigzag. Litecoin looks like it wants to print a zigzag B wave, but it could be a flat as well. But I think we're in the B wave. That's why price is kind of not doing anything. It's hanging out. It's consolidating. We're in a B wave once again of this A wave, only to turn around for the C wave. And maybe that is when we get the massive drop. So back to Bitcoin, gun to my head, deciding as to where we're at, I would say we are in the B wave of the break of this trend. Zoomed out. Zooming out. So the top, so zooming out, this is A. B can go as high as, taking our Fibonacci retracement tool, top of A, bottom of A. B can go as high as 44,903, right? Basically like flirting with 45K. And then I expect to see a move down after a small pivot. Okay, So that's what I'm seeing on the charts. Yeah, that's what I'm seeing on the charts. Maybe right when we finish this B wave, coming up here, we get our pivot. Maybe that's our big dump. You know, if it's not then I don't know when. Hey Jay, how about Link? Let's look at Link. Lots of Link fans. Okay, I haven't looked at Link. I think the only time I look at Link is when you guys ask me to on this stream. I don't look at it but once a week, maybe. Okay, so because I haven't seen it in a while, I'm going to zoom out on a high time frame. And actually, let me erase this. I don't want to prejudge. Actually, let me go on another chart. Is this the best chart I have? Okay, here we go. Okay, what is this? Yeah, I don't know. Okay, yeah. This looks like a 5 waves ending diagonal, right? Your 3 3 3 3 3. This looks like a crazy wave 4 correction, right? This looks like 5 wave impulse. This looks like your initial break of structure, A wave, right? To wave 4 of the lesser degree or previous degree. And this looks like you're going to get a B wave, right? That's pretty much what I'm seeing with Link. You need a B wave. Link minimum, just on this chart, minimum, because we're getting, that's a flat correction. Minimum, I'm seeing Link come to 39.90, okay? Because I see A of B, B of B, we need the fully impulsive C of B, right? 39, between 39 and 45, obviously it can go all the way up to 111, but I think it's likely that 886 is what I see those flat correction retracements typically target. So $45 I can see Link come to. That's, if you know, highly probable. Between 39 and 45, highly likely. That's Link. Hey Colby, I know that trying to figure out the timing is basically impossible, but if you had to estimate, how long do you think it will take BTC to finish this B wave and enter into the C wave and head south? That's a good question. Let's see if we can't get some sort of estimate. So back to BTC. Hey all, thank you for coming onto the live stream. Don't forget to like it if you haven't yet. All right, let's zoom in to the 15-minute time frame. And timing is always tricky, Cole, because one of the things that, if I look at amateur trader Dean and then pro trader Dean, amateur trader Dean was so impatient. And, I thought I was a relatively patient person. But then patience in trading is another thing entirely. I think that needs to be cultivated. And, it's difficult to just let your trade go. Not to manage it if it doesn't need managing, or, not to mess with it, not to take profits too early or, or too late, obviously. Just to stick with your original trade plan. Maybe you refine it a bit. But it's tough. So yeah, the patience thing is big, and I think the more I work on it, the less I care when things happen. All I care about, my entire goal, like kind of mechanistically, is I'm gonna let it play out to hit the targets I know it's going to hit. When that happens, I don't know and I don't care. But since you asked, let's see if we can't tell. The way I would do it, if I had to do it, was I would simply do things proportionally. And that's a cool thing about these charts. There's a lot of proportion in them. So our A wave, or purported A wave, took exactly 5 hours and 30 minutes, okay? And that break of structure is usually quite quick. So if it took 5 hours and 30 minutes to do the initial A wave, and thus far, this B wave has taken 4 hours and 15 minutes, I would say maybe 6 hours. I'd say 2 more hours for this impulse to form, after which, remember, price doesn't just turn around. You need some sort of pivot, so a flat correction, then down. I would give it 8 hours from now. So what would that be? Here in Gaithersburg, Maryland, DC area, that would be 1 a.m. I would say. If I gun to my head, I had to estimate when we start heading back down, I'd say 1 a.m. Hey Joe Caper. Sorry if I'm mispronouncing your names. Sol, please. So Solana. All right, let's look at Solana real quick. I have that in my charts for sure. I've traded everything. It's so funny. I used to trade everything under the sun, and now I just trade Bitcoin. In terms of trading on leverage. For investments, I also just whittled it down. I have one bag that I'm looking to sell on this exit pump. The further I go and the more I develop, the less I'm interested in trading a bunch of things, because I'm just concerned with buying high or buying low and selling high, and I don't give a damn what it is, as long as there's enough liquidity and fundamentally it's not a dumpster fire. Okay, so I'm not familiar with Sol, so what I'm going to do once again, I'm going to go on the high time frame, and I think this chart is pretty much accurate, or has quite a bit of information, because I think this is a relatively new project. So September 2021 seems like a regular, or this seems like it around the time it started, okay? And so off the bat, I do see an impulse, 1, 2, 3, 4, 5, similar to what I saw in Link. I see 5 waves here, okay? As for what the context of that is, I don't know, right? I can't tell you if this is 5 waves in a reversal, or 5 waves as a part of a 3-wave structure, right? I don't know. It doesn't matter, though, for the purposes of just reading the next move, right? Then after those 5 waves, I'm seeing this as an initial break of structure, for sure. Especially since it comes back up here and comes back down here. And if I take my Fibonacci retracement tool from the bottom of this purported wave 4 to the top of that, well, it'd go from the top of this. You know what? Because we respect the 382 right here, I'm going to look at this again. And so, again, if I'm taking my Fibonacci retracement tool from the bottom of this wave 4 to the top of what I think is the A wave, and the fact that we respected the 382, and I know that the maximal retracement of wave 4 is the 382, I'm going to second guess my hunch that this is the wave 4 of the larger degree. Does that make sense? Because the respecting of the 382 tells me that it's probable. The probability just jumped up that this is a wave 4 of the larger degree, right? Because the A wave, the first A wave, the A of A typically goes to wave 4 of the lesser degree, right? And then the complete A wave typically goes closer to wave 4 of the larger degree. Because we're so far from this area, which is the wave 4 of the larger degree, and this is supposedly kind of... Thing is, we can always come down here, okay? We can always come down here. And if we did, I would expect us to find support. Let's say we came down in Solana and we found support, god dang, like 40%, right? We found support around $48. Then I would say for sure, this is the count and this is a wave A. But I would want to see this wave A come down at least to the $48 region before saying this is a legitimate break of structure. Okay, right now it could be either a wave A or a wave 4, and this could be wave 4 of a massive wave 3. Okay, so that's what I'm seeing. But knowing what I know from Bitcoin, the likelihood of Bitcoin kind of moving to the downside, I would say this is likely to be a wave A that is in the course of finding its way down. Right? Finding its way down at least 40 to 50%. That's just my take. That's what I'm seeing on Solana. And this is the beauty of using Bitcoin as a proxy for the cryptocurrency market at large. You don't have to figure everything out. You just have to figure out what Bitcoin's doing with a high degree of probability and get the hell out of the way if it's nuking. And if it's pumping, then look for things that are also in position to pump with it. So if I see Bitcoin is likely to nuke, I think Solana is going to do the same. So I think this is a wave A. And if this is a wave A, you're coming down. Then I would expect some kind of wave B. It doesn't matter what it is. Could be a flat correction, could be a zigzag, could be a triangle. It doesn't matter. Some sort of counter trend. And then Solana goes down like everything else. That's what I'm seeing on the Solana chart. Jay. Hey everyone, welcome to the live stream. If you're new, don't forget to like the stream, just so other people can see it as well. Anything else anybody want to look like? Anything else that anybody want to look at? Go back to Bitcoin really quickly. Yeah, we're hanging out. This to me, hanging out, you're consolidating, Bitcoin doesn't just hang out for no reason. It's always up to something. It's a sneaky guy. So if it's hanging out, it's planning a pump, usually, or a dump. Here we go. Yeah, I do think that this is a B wave. But it could be wrong. This could be wave 2. And this could be a complex correction in wave 2, right? Could be wrong. Could be wrong. Could be a kind of WXY. situation. And this comes up here. And then nuke down. It could be that. Or it could be a B wave. Let's go into a smaller time frame. The 3-minute time frame. Um, this looks like an impulse to me, right? We're on the 3 minute time frame, so keep that in mind. This looks like a 1, 2, 3, 4. This looks like a complex fourth wave correction that we're in, and then we pop up. I don't know what that means, but that's what it looks like on a very small time frame. But the beauty of trading things large time frame. Do you see how no matter how sort of skilled you may be, if you trade on small time frames, your job gets that much more impossible. And I try to do this. Like, you can be successful scalping, but you have to have good strategies, right? Um, I'm not necessarily interested in charting 24/7 and trading 24/7 and managing 24/7 and worrying about stops getting hit 24/7. It's just trading larger moves on larger time frames, I think, is so much more simple and so much more rewarding, right? You notice larger trends, right? This is initial break of structure, boom. You get your B wave in, then you just trade for the big move down, right? And as for when to get in, you can ladder in, right? Just like people use dollar cost averaging in investing, you can use those same risk management techniques in trading, right? You can split your buy or your sells up in many different parts, and with patience, with composure, get in every time you think there is a good opportunity and the price is at a good point, right? And you don't have to be right 100% of the time. Good risk management makes it so that you can be more off right like 51% of the time and still kill. And it's funny, like the more research I do, and at this point in my trading career, I look, because there's not that much information about crypto traders, but I like to read stories and anecdotes about other traders. It doesn't matter what markets they're trading. So like I read a lot of market wizards and stuff like that. If you guys know about the series, then let me know. But basically it goes into like the mentality, the mindset, and the techniques that these people use to be profitable for years and years on end. 10 plus years of profitability. It's not a mistake. And a lot of it is risk management, to be honest. And a lot of these people, you'd be surprised. Their hit rates, and these are people that, some of them, when they started charting, they had to go to the library and pull charts out from the library and do it by hand, okay? And they sometimes have win rates or hit rates of 20%, meaning, like, they're often wrong. They're more wrong than right. But using good risk management, they're still profitable traders. That's how important risk management is. A lot of people people think I'm wrong a lot. Imagine every 10 times I made a call, 8 out of 10 times I was wrong and I was still profitable, able to pay my mortgage, my bills and all that stuff. That's crazy to me. That's just crazy. Like, that is insane to me that's even a thing. But a lot of those old school traders, that's their hit rates are low. They're like only right like 20-30% of the time. And they take a bunch of small losses and they have good risk management. Anyway, it's pretty much it from me. Like the stream if you haven't yet. I appreciate you guys showing up, and I wish you well. I'm going to end the stream now. Take care, everyone. Bye.